Today's video topic is why investing is more powerful than saving. We are going to discuss the details on why investing is so much more important than just saving our money. And I'm going to show you a calculator and actually break down the math for you, because we definitely want to accelerate our path to financial freedom, and investing is going to help us do that. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. So let's dive right in. All right, we definitely don't just want the majority of our money sitting idle in a savings account. We want to take advantage of compound interest and invest our money so that we can have financial success and become financially free when we want to. I know that for me, it was hard for me to go from saving to investing, but once I did that and I started seeing the rewards, I was so glad that I did. And while yes, saving is a very important habit, we don't want to just stop there. We want to have our savings and then also invest our money. So let's dive into these reasons on why investing is more powerful than saving. One reason is the limitations of savings account. You can only get so high of an interest rate on a savings account, and usually that is not even going to keep up with inflation. But with investing, you can get really high returns. You can even double your money with investing. There's no way you're going to be able to do that in a savings account. While yes, savings accounts provide the security, you're not worried about losing your money, it is not going to give you high enough returns to help you retire or become financially free, or even keep up with inflation, or let alone surpass inflation. And reason number two, on the other hand, investing gives you those higher returns. By allocating our money toward investing, whether it's in the stock market or even in real estate, we are going to be able to see so much higher returns than if we just continue to save our money and leave it in a savings account. We want to be able to grow our wealth and surpass inflation, and we can do that with investing. And the way that I like to invest is by having a long-term perspective. I'm not worried about what is happening in the short term. I know that markets are going to go up and down in the short term, but in the long term, they are going to rise. So I'm more focused on the long term. And I have honestly seen that with my own investments. I was able to purchase one property. I purchased it in 2016 and ended up selling it in 2021, just 5 years later, and was able to double my money on the property. And that doesn't even include the income I was receiving from my roommates. And I'm not saying that's going to happen every time, but that is just one example of investing. That is what I have experienced. And then with some of my stock market investments, I've seen over 100% return within just a few years. And we don't want to rely on that. We don't want to always think that we can double our money within 5 years or have 100% returns in the stock market very, very quickly. That's why I like keeping the long-term approach, because I'm not so worried about making a quick win. I don't need the money that I am investing right away. But when that does happen, when it does double within 5 years, then I'm able to take advantage of that. And there's no way we would even have that opportunity if we were leaving our money sitting in a savings account. And then the third reason on why investing is more powerful than saving is, of course, compound interest. And I want to show you a calculator so you can see exactly what I am talking about. Because compound interest can turn into the snowball effect, and we can make so much more money without even investing more money. All right, let's take a look at some of these numbers on this calculator. Let's just say that we have an initial amount sitting in our savings right now of $10,000. And then we are going to say that we are earning 1% return on that money. And we're going to say we leave it there for a period of 10 years. All right, so you can see on the graph, all of this purple is the initial amount. And then this green amount is interest, is compound interest. So by leaving our money in a savings account earning 1%, over 10 years, we're going to make just over $1,000. We will have a balance of $11,051, which is okay, But if we were to put that money in the stock market, just $10,000, we aren't even contributing anything extra. And let's say we are earning 10% rate of return, then we are going to have $27,070. And now you can see this green is so much more, right? That compound interest, because the return we are getting is so much more than we could get in a savings account. And now let's take a look at another example. Let's say we are going to contribute a certain amount every single month. Let's say we contribute $2,000 every single month and we get a rate of return of 10%. And let's say we did this for 10 years again. So now we are going to have $436,760, which is quite a bit of money. And let's say we did this from age 30 to 40. So from age 30 to 40, we have $436,760. And then let's say we are not going to contribute anything extra from 40 to 65. So for 25 years, let's say we are going to put our beginning balance of that $436,760, and we're going to change our contributions to 0, and then we are going to change this to 25, right? So from age 40 to age 65, which would be 25 years. We can see now we have a balance of $5,265,992. That was just for contributing $2,000 every single month for 10 years and then not putting anything else in. And now we have over $5 million. And you can see on the graph, look at how much more green, how much more compound interest we have over that time frame. So you can see the huge difference of investing as much as possible as early as possible. I know that a lot of people think it is safer to keep money in a savings account rather than invest it, but honestly, it is scarier to do that because you are not even keeping up with inflation and you are missing out on these high returns. And if you are thinking, I know I should be investing, but I'm just too scared to do that, I have a free masterclass where I go over how I can help you invest in the stock market and overcome your fears of investing. I will leave a link below in the description. You can click on that link and check out the free masterclass. And here are just a few tips to embrace investing. The first tip is to set some financial goals. Where is it that you want to be in 5 years, in 10 years, in 20 years, in 30 years, however long? Where do you want to be? And what is going to help you get there? Investing will help you reach those financial goals. So if you are focused on building your wealth over the long term, investing is going to help you do that. And then the second tip that I want to share with you is to educate yourself. This is what I did when I wanted to invest my money, but I was scared to do it. I wanted to go from saver to investor. And the way that I did that was by educating myself. I did research on how to invest. I asked people that were investing and were successful with investing how they were able to do it. And then I actually took the steps and did it. And as I was taking the steps, I got better and better. I continued to invest my money. And there are a number of ways we can educate ourselves. We can use a financial coach, for example. We can watch YouTube videos like this. We can read books. And I do have my book out, You Will Be Financially Free. And I do go over investing in this book, how I was able to invest in 4 different properties and how I was able to invest in the stock market to become financially free and become a millionaire. The more that we can educate ourselves about investing, the less scary it is going to become. And then tip number 3 that I want to share with you to help you embrace the power of investing is diversifying your investments. A lot of people are scared to invest in the stock market. They think they will lose all of their money. But the thing is, if we are diversifying, if we are investing in different items, then we don't have to worry about losing all of our money. The only time we're going to lose all of our money is if something is going on in the world. And by that point, I just hope that you have food storage. So if we choose good investments, we are going to build our wealth over the long term. And by diversifying those investments, we don't have to worry about losing all of our money. It really helps mitigate that risk, and we can still get really good returns. Hopefully you can now see why investing is more powerful than saving. Comment below and tell me if you are going to invest your money. And if you found this video helpful, please hit that like button and share it with someone else else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more cool content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.